Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list, questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. Also, keep in mind that nothing in this podcast is or should be construed as financial, investment, legal, or tax advice. In fact, nothing that I say in this podcast should be construed even as insurance advice, as I don't give individual advice blanket just across the internet, unqualified, to random strangers. So if you need any of that stuff, contact a licensed professional that you know, like, and trust, preferably someone licensed in your jurisdiction. And now for this week's question. All right. Should I buy one huge policy or lots of small policies? Well, it really depends on how much you can afford. There might be a slight increase in the cost of purchasing multiple policy, or like if you're buying smaller policies. I would say probably just due to what's something called banding. When you buy larger face amounts, insurance companies tend to give you a better deal on the cost of coverage, and also just how certain policy charges are assessed. So it really just depends on what's the carrier and what you can afford. I mean, ultimately it comes down to what you can afford. If you cannot afford to buy one big policy, it doesn't matter how good of a deal you're getting on it, because you can't afford it. So you buy what you can afford. However, and I'll say this, what I think actually is the most important question, and I alluded to this, which is how much can you afford to take on at one time? Does it really matter if you get a discounted per $1,000 charge if you just can't afford the premium? You buy several smaller policies, and as and when you can afford them, at least in my mind, that makes the most financial sense. No need to really complicate this, and don't get too hung up on age. A lot of people get hung up on age. I mean, I have clients in their 60s who are still buying life insurance on themselves. The difference between a 60-year-old and a 20-year-old, it's a 60-year-old doesn't have as long to pay premiums as a 20-year-old. But in both cases, it works. There does come a point where it won't work, but 40s, 50s, 60s, people buy insurance in those ages. Now, it doesn't look as attractive when you're in your 60s, right? But again, it's because you're not buying it when you're younger. And this ties in kind of to the second question on today's episode, which is I'm over 60. Does it make sense for me to keep buying whole life insurance? Yeah, it can. Yes. It all depends on what you're trying to do. So listen, if you're 60 years old, you're not 25. So you don't have decades upon decades to pay premiums. What you can do is build up some cash value in a whole life policy. Yes, even in your 60s, it will still work. It won't work like it did when you were in your 20s, but nothing does. I have clients who've been very successful doing this well into their 60s. Another reason that you might buy whole life insurance is for some of these optional, either the dedicated long-term care riders or the chronic care riders or chronic illness riders. And those are to hedge against nursing home stuff, protect your other assets, and also a death benefit for estate planning. So when you buy for estate planning and asset protection, the key is going to be the structure of the policy for more protection, more for protection than kind of trying to build up high cash values in the policy. Not that those aren't important. It's just it's not going to be your number one priority if that's the purpose for the purchase. And let's see. Should I worry about getting long-term care insurance? Well, again, it depends. If you're over 50 and you aren't already in excellent health, I would seriously consider it. I mean, there's sort of a double-edged sword here. Like, you want to buy, if you're going to buy long-term care insurance, you need to be reasonably healthy, right? You need to be in pretty good shape. But people tend not to think about insurance until they're not healthy, until they're not in good shape. Like, something's gone wrong. Oh man, I'm not feeling well. You went to the doctor. He said, I have some memory problems. Blah, blah, blah. That's not when you want to buy long-term care. You want to buy it before then, So, I mean, even if you're in excellent health right now, I would still consider it. It doesn't, I mean, long-term care insurance, like a dedicated policy, my own personal opinion is, I wouldn't buy long-term care insurance. However, the chronic illness riders that you can get on life insurance policies pay a very generous benefit. There is some, differences between that and getting a dedicated LTC policy, but they're getting really good at designing these chronic care riders. I've seen a lot of them, and in a lot of cases, like, the benefits that you get are greater or equal to or greater than the benefits in terms of dollar amounts. The higher dollar amounts, or at least equivalent dollar amounts, than what you can get from LTC rider policies, of the hybrid policies. And in some cases, the true, like, standalone, LTC insurance. It all functions like, and if you're talking about the LTC riders on life insurance, what are called the hybrid policies versus standalone policies, the coverages are fairly similar. They work the same way. The dedicated LTC policies, you're dumping money into a policy that may or may not pay off, and it's not like, I mean, it's sort of like, with life insurance, it's going to pay off eventually. Unless medical technology advances here in the next 20 years, 10 years or whatever. With LTC, it's sort of like, even when you buy car insurance, like, at some point you don't want to use it, but at some point you kind of expect to be in a car accident. Hopefully not a serious one, but car insurance pays out, right? Homeowners insurance very rarely pays off. When it does, you're really glad it pays off. But it's almost like that, right? So LTC, you're not really sure if you're going to use it or not. I mean, there are statistics about people needing long-term care insurance, long-term care. A lot of those studies don't take into account future medical advancements, but it's one of those, you might use it and you might not. So this is why a lot of people are on the fence about it. But again, if you're in excellent health, it's something to consider. Dementia and Alzheimer's is a very sad fact of life. A lot of people get it. Obviously, not everyone gets it, but a lot of people do. Age is a major risk factor. So the last stats that I saw were 2 out of every 100 people, roughly, between the ages of 65 and 69 have dementia. That's it's 20%. Right? So the risk doubles every 5 years. So by age 90, 33 out of 100 people develop dementia. Now, again, that is today's statistics. That's the numbers for today with today's technology. Will that be the same in 20 years, 30 years? I mean, I hope not. But, if things don't change, then maybe things get worse, or these are the stats that you can look at. Hopefully things improve and you see advancements in medical technology. So I think there's going to be probably some, and really a lot of this is going to be, at some point, the life insurance companies, the health insurance companies are going to start pushing for this because it's expensive. It's expensive. The LTC market is very thin. And the reason it's very thin is because it's so hard to insure. LTC companies they're playing a very risky game, and they know it. They know that the premiums, a lot of times premiums have to increase over time. The costs for nursing home care go up over time. It's very, very expensive, very expensive industry, very lucrative in some ways. But for the insurance companies, the claims payouts are huge. Huge. So there are incentive. Even the carriers are incentivized to figure out ways to try to reduce claims. And the way you reduce claims is not having to pay out. And the way you not have to pay out is make sure that people are healthier. I'm not talking about just flat out denial of claims for no reason or whatnot. I mean, that's more of tightening up, forcing the insurance company to abide by the terms of their contract. But I'm talking about they want to legitimately slow down or reduce the number of claims that have to be paid out. You're looking at how do we keep people healthier for longer so that we don't have to pay these claims. And I think that's where the market is headed. Improvements in cognitive therapies that help people either slow down, halt, or reverse the disease. And that's obviously speculation on my part, but that's where I see the market going. So anyway, it's not just the statistical probability of it. And we could talk statistics all day long. So being physically weak and frail is another aspect of this. So it's not just like, Alzheimer's and dementia. Having high blood pressure, blood vessels in the brain that are damaged, twisted or blocked, having a stroke, having a weak immune system, heavy smoking, alcohol use, all the stuff that, eating, junk food and that, of course, it leads to downstream effects on your health. All the fun stuff that people like to do. Smoking is a bad one. That one raises dementia risk by, somewhere between 30 and 50%. It's huge. Quitting might reduce a person's risk. Might. And there's a question mark there about that. So there's also the familial gene, which it's somewhat rare, but there is a familial gene for dementia that will cause it in people over the age of 50. Other risk genes that increase a person's risk for developing dementia, and the science on that is, and I guess in some ways, cutting edge. But there are known risk factors, genes that are known risk factors for that. Cognitive reserve is a big one. So your ability to resist and recover from disease mentally. If you can, and the way that you do that is by having a strong immune system, having physically strong body, having the willpower and just the constitution to keep going. So some risk factors can be reduced by living a healthy lifestyle, maintaining a slim waistline, eating healthy, lifting weights, getting sufficient conditioning and cardio, staying mentally active and challenging your own cognitive abilities. With hard thinking and problem solving activities that are meaningful and productive. Some people see that as like, oh man, it's not very fun, but it depends now. So you have to decide like what your values are and what you think is quote unquote fun, right? Do you want to live a long, healthy life? Honestly, it sounds weird to me that people say like, nah, I don't care about that. I'm going to die when I'm 60 or whatever. But some people have that mentality. Like they just don't care. They just don't care. If you're of that mentality, best of luck to you. But there's a growing population, a growing number of people who don't want to do that. They don't want to deal with that. So your option is to try to live as healthiest life that you possibly can. So if you of course, there's some things that you can't do anything about. Like some risk factors can't be reduced. Like if you just old age, genetics, there's limited things we can do about that right now. Maybe that changes in the future, but right now there's very limited things that you can do about that. So if you want to financially protect yourself and your spouse and kids, then you would consider long-term care insurance or a chronic illness rider on a life insurance policy. So that would be your alternatives. And if you need the money, if you ever need money for nursing home care or something like that, it would be there. And if you don't use it, if you don't use the chronic care rider or you don't use the LTC benefits on the LTC rider, all that gets then converted to a death benefit when you die, and that money gets passed to your heirs. I will say that this is the one major downside of an LTC policy, a standalone policy, is that if you don't use the policy for some reason, that money is gone. It's just gone. You don't get it back. And with the life insurance, even with a hybrid policy, you can get that money back, right? So anyway, something to think about. Again, these are great questions. Keep them coming, and I will see you in the next one.
Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, MONEGENIX.com, and sign up for my daily email list.